Hi, I'm Roger Montgomery from Montgomery Investment Management, and welcome to this week's Video Insight. Well, it's appropriate that I'm coming to you from our new boardroom at Castlereagh Street in Sydney, and if you listen carefully, that we're surrounded by significant construction activity. You can probably hear the jackhammers around me. Why is it appropriate? Well, today I want to talk to you a little bit about Bingo Industries, which held their AGM. At that AGM, they're forecasting a 50-odd% increase in EBITDA over the next financial year. And it's interesting because it's dependent, or at least partly dependent, on the outlook for the residential construction industry. Now, many of you know that we've already seen a very significant drop in building approvals, as this chart attests. There's been roughly a 40% drop in building approvals from the peak. Of course, building approvals are a leading indicator for construction activity, particularly in the residential sector. And on this particular chart here, the second chart, you can see that the leading indicator for building approvals, which is land sales, is also trending lower. So we think that the outlook for construction activity, along with our third chart here, a very significant drop, as you can see at the end there, in wages growth, suggests that the outlook is going to be difficult not only for the construction industry, but also for the retail sector. And so on this particular slide, you can see some of the names that we're targeting as potentially interesting over the next 6 to 18 months. One of those companies is Bingo. And we've been eagerly anticipating a downgrade for this company, given the outlook for the construction industry. Now, Bingo Industries' revenues are dominated by the building and demolition segment. It's far, far bigger than its recently growing, but still very, very small commercial and industrial waste business, where it collects waste from the likes of AMP and McDonald's. The business's forecast, longer term, is largely dependent, or at least partly dependent, if not largely dependent, on the outlook that's represented in this particular chart here. Now, in this particular chart, you can see that Bingo Industries' major sources of revenue are expected to be relatively stable. In fact, if you look at the non-residential building segment, and the engineering construction segment, you can see that over the course of 2019 out to 2021-22, the expectation is they'll be fairly stable, not changing very much at all. It's the residential building segment that is expected to decline. But you'll notice in the highlighted section, the data coming out of the Australian Construction Industry Forum is showing an expected decline in residential building activity of about 10%. That contrasts rather sharply with what we've shown you earlier, and also this chart here from BIS Oxford. Now, according to BIS Oxford, you can see that there's a total fall of about 39,000 units in projects that are 4 stories and above, and that's a 50% decline. BIS Oxford have also said that from a total of 230,000 starts in 2015-16, they're expecting it to trough at 155,000 starts in 21-22. That's a fall of about 33%. So the question is, who do you believe? Do you believe the data coming out of the construction industry is the one to believe? And remember Buffett's comment about never asking a barber whether you need a haircut, or do you believe BIS Oxford? Who you believe will largely determine what you think the outlook is for Bingo Industries. Thanks very much for your attention today. Look forward to talking to you again next week. And in the meantime, please continue to follow us on Facebook and Twitter.